folks are like, well, what happens if, you know, they don't redeem, right? So that's where you get the home run. So that means 1 out of 20 tax liens are not going to redeem. And with that, that means for every 20 liens you buy, you're gonna end up owning a house, mortgage free, and that old saying back in the day that was on the infomercials, free and clear. Now, one of the things to clarify, you know, there was, you know, back in the day, there was tons of infomercials, and like anything, there's shady characters in any story out there, right? You got shady lawyers, you got shady doctors, you got shady, anywhere you go look, there's always somebody hiding in the shade. And with tax liens, one of the things of shade years ago is there was these infomercials and they were actually paying fake testimonials, and the people be like, I bought this $150,000 house for just $300. So that's not very, I wouldn't say that's possible. Now, has it happened? Yes. What's more realistic is, say it's a $100,000 house, the back taxes are $2,000 for that year. You buy that tax lien at 10% interest. Let's say you buy 20 of those liens, all right? So you've put $40,000 into tax liens. You're gonna get 10% back on you're gonna get 10% back on 19 of those tax liens, which is great. And you're gonna end up with one house, mortgage free, which is awesome because the tax lien wipes out the mortgage, because the tax lien is always the priority lien on a property. So you think you own your property, try to avoid paying the taxes because the land was there first. Think of it like a pyramid. The tax lien is always the fundamental lien. So anything above that gets wiped out. The tax lien sends a notice to the mortgage company, and this is why they redeem 95% of the time, because the government sends a notice to the mortgage company. They're like, hey, pay the taxes or we're gonna foreclose and wipe you out. So most of the time, the bank will pay the taxes to avoid the tax lien sale. However, there are plenty of properties that maybe don't have mortgages, or, you know, maybe the banker was out on a bender the night before and forgot to pay the taxes. You know, we're human. We've all seen The Wolf of Wall Street, right? So not everybody's perfect. And that's how these things end up happening, and you can get that house. So back to our example, if it's a $100,000 house, the taxes were $2,000 in the first year, it goes 3 years. So that means you pay out the other 2 years. So now you're into the property for $6,000, and then probably another $1,500 to do the foreclosure process. You now have a $100,000 house that you got for just $7,500. So where else can you do stuff like that? It's tried, tested, and true. So it's time for you to get started.